The question isn't if a recession is coming, it's when. Despite the appearance of stability and stock market optimism, beneath the surface, warning signs are flashing brighter than ever, and some of the most revealing signals are being kept from the public eye. Today, we're uncovering what banks aren't telling you about the coming economic crash and why you should pay attention. Recently, Treasury Secretary Scott Bessent issued a stark warning. Certain parts of the economy are already showing signs of strain. He warned that if the Federal Reserve doesn't act quickly to cut interest rates, the pain could spread rapidly across every corner of the economy. This upcoming recession could be unlike any previous downturn because the US is far less prepared to handle it. Look at the American consumer. Living on credit has become the norm. Credit cards, payday loans, buy now, pay later schemes. They're the new safety nets. But one unexpected expense, a medical emergency, a job loss, can trigger a domino effect. Evictions, bankruptcies, financial ruin. The gap between comfort and crisis, narrower than ever. Millions are vulnerable to just one shock. Central to this coming storm is the Federal Reserve's stubborn refusal to lower interest rates. To fight inflation, they keep borrowing costs high. But this strategy has consequences. Mortgage rates are soaring, locking many out of the housing market. Sellers can't sell, buyers can't afford, and renters, they're stuck in limbo. The American dream of homeownership? For many, it's slipping further away, an overdraft notice in disguise. And this recession will be different. Companies are increasingly replacing human workers with software, cutting costs, eliminating jobs, without the messy layoffs or protests. But the human toll? It's invisible. People losing purpose, hope, and the chance to rebuild. The old idea was simple: get a degree, stay adaptable, and you'll thrive. But AI is rewriting that story. Algorithms now compete with white-collar workers, writing reports, analyzing data, creating art and code. The recession ahead could shrink paychecks, wipe out middle-class stability, and make the promise of a secure job vanish. As jobs disappear and hope diminishes, trust in institutions erodes. The next crash? It could ignite chaos. Bessent's warnings about high interest rates highlight a deeper crisis: policy paralysis. Keep rates high, and the middle class suffers. Lower them too fast, and inflation roars back. Meanwhile, political gridlock prevents effective action. Politicians are more focused on elections than solving real problems. And as the crisis deepens, blame will be cast everywhere, except where it belongs. Recessions aren't just numbers, they're emotional events. Fear grips us. Fear of losing what little we have, fear of becoming irrelevant, fear that the future is slipping away. When collective confidence erodes, spending halts, trust collapses, and the economy spirals downward. No stimulus check can restore what's lost if faith in the system is broken. Signs of trouble are everywhere: shrinking factory output, rising defaults, and retail sales that seem stable only before the storm hits. Economists talk about a soft landing, but history suggests that when a plane runs out of fuel mid-flight, impact is unavoidable. The next recession? It might not be about how deep it goes, but about how disillusioned it leaves us. The US job market? The weakest since 2011. Over the past 6 months, job creation has averaged only 17,000 per month, comparable to post-2008 recovery. And experts warn the trend could get worse as AI continues to eliminate entry-level roles, leaving millions jobless and desperate. While stock markets remain buoyant, investors betting on a swift recovery, banks like Bank of America warn that the illusion can't last. Household income stagnates, inflation eats into savings, and recent GDP figures, driven by AI-fueled spending, mask the real decline in purchasing power. Amid all this, gold and silver prices have doubled this year, signaling a loss of confidence in fiat currencies. Central banks worldwide are reducing their dollar reserves, turning instead to tangible assets. This trend? Expect it to accelerate, further weakening the dollar and boosting precious metals, another sign that our monetary system is in flux. This coming recession isn't just about numbers. It's about trust. Trust in the economy, in institutions, and in each other. As the cracks widen, the old notions of security, steady jobs, home ownership, savings are becoming relics of the past. So, what's the takeaway? Prepare now. Build savings, learn a trade, invest in gold and silver. Because whether the recession hits tomorrow or next year, your response will determine whether you fall or stand tall.